Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Napco Security Technologies, Inc. quarterly report. Napco Security Technologies, Inc. offers a wide range of electronic security systems for various applications. The company's product portfolio includes access control systems, intrusion and fire alarm systems, door locking devices, and video surveillance systems. The access control systems provided by Napco include identification readers, control panels, PC-based computers, and electronically activated door locking devices. These systems are designed to secure commercial, residential, institutional, industrial, and governmental properties. In addition to access control systems, Napco also offers intrusion and fire alarm systems that consist of various detectors, a control panel, digital keypad, and signaling equipment. The company's door locking devices include microprocessor-based electronic door locks with push-button, card readers, and biometric operation, as well as mechanical door locks and simple deadbolt locks. Napco's alarm systems feature automatic communicators, cellular communication devices, control panels, combination control panels / digital communicators, digital keypad systems, fire alarm control panels, and area detectors. The company also provides video surveillance systems that comprise video cameras, control panels, video monitors, or PCs. Furthermore, Napco buys and resells various identification readers, video cameras, PC-based computers, and peripheral equipment for access control and video surveillance systems. The company offers school security products and markets peripheral and related equipment manufactured by other companies. Napco Security Technologies, Inc. (NSSC) has experienced a substantial increase in its stock price over the past year, driven by a series of impressive financial performances and positive analyst sentiment. One key factor contributing to this upward trend is Napco's consistent delivery of strong earnings reports. In both fiscal Q2 2026 and Q1 2026, the company exceeded analyst estimates, with EPS surpassing expectations in both quarters. Additionally, revenue growth has been robust, with a notable increase of 11.8% year-over-year in Q1 2026. The company's recurring service revenue, RSR, has also demonstrated remarkable growth, reaching a prospective annual run rate of approximately $99 million based on January 2026 figures. This strong performance is particularly noteworthy, as RSR represents 50% of total revenue with a high gross margin of 90.2%. Furthermore, positive analyst ratings and price target increases have played a significant role in driving investor confidence and fueling the stock price upward. Several financial analysts, including James Ricciuti from Needham and Lance Vitanza from TD Cowen, issued favorable ratings and increased price targets for NSSC in late 2025. The combination of Napco's strong financial results and positive analyst sentiment has collectively contributed to its stock price increasing significantly over the past year. As the company continues to deliver robust earnings and revenue growth, it is likely that investor confidence will remain high, driving further upward momentum in the stock price. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth are largely attributed to the increase in service revenue and equipment revenue. Specifically, service revenue has seen a growth rate of 12.3% to 12.5%, while equipment revenue has experienced an even higher growth rate of 12.4% to 13%. These significant increases in revenue can be attributed to various factors. One key driver is the increase in the number of cellular communication devices being put into service and activated, contributing to a substantial boost in revenue. Additionally, pricing increases for certain products such as door locking and intrusion alarm systems have also played a role in driving growth. Furthermore, an overall general increase in sales volume for door locking products has contributed to the upward trend. The product mix, increased volume, price increases, and reductions in sales discounts for equipment revenue are also significant factors that have driven revenue growth. These factors collectively contribute to the substantial increase in revenue experienced by the company. Net income and profit margins experienced significant changes between 2024 and 2025. Net income increased by $3,036, 29%, to $13,503 in 2025, indicating a substantial growth in revenue. This increase was also reflected in the net income figure of $25.7 million in 2025, which is $4 million more than the previous year. Profit margins also saw improvements during this period. The gross profit margin increased from 56.9% to 58.8%, indicating a better control over costs and pricing strategies. Similarly, the operating profit margin rose from 26.1% to 30.6%, demonstrating enhanced operational efficiency and profitability. Although there was a slight decrease in one of the gross profit margins, it remained relatively stable overall. The reasons behind these changes are not explicitly stated, but can be inferred as improved financial performance. This suggests that the company's efforts to optimize its operations and revenue streams have paid off, leading to increased net income and profit margins. The company's financial performance indicates a positive trend in operating cash flow generation. The data shows that the net cash provided by operating activities has been steadily increasing over the past 2 years, with a significant jump from $25.5 million to $26.7 million in 2025 compared to 2024. This upward trajectory suggests that the company is efficiently managing its operations and generating sufficient cash to meet its financial obligations. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes in recent years. Initially, there was no substantial change in the debt level, with a slight increase from $28,009 to $29,535. However, this trend shifted when an available revolving credit line of $20 million became accessible as of December 31, 2025. In terms of interest expenses, a notable decrease occurred between 2024 and 2025, with interest paid dropping significantly from $15 to $0. This reduction in interest expenses suggests that the company has made efforts to manage its debt effectively or has taken advantage of more favorable financial conditions. Overall, these changes indicate a shift towards improved financial management and reduced costs for the company. Management's primary focus is on innovation and adapting to changing customer demands and industry trends in order to maintain product margins despite increased costs. This emphasis on adaptability suggests a commitment to staying ahead of the curve and responding to emerging opportunities. The company's financial outlook appears stable, with projected cash flow from operations expected to meet working capital requirements for the next 12 months. This indicates that management is confident in its ability to manage the company's finances effectively. In addition to managing its cash flow, management is also taking steps to minimize risk by carefully managing its investment portfolio and maintaining a sufficient liquidity position through a revolving credit line of $20 million. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out significant amounts in recent years, with $9,985,000 distributed in 2025 and $4,610,000 in 2024. Additionally, the company has also engaged in share buybacks, purchasing $18,008,000 worth of shares in 2024. These actions demonstrate a commitment to rewarding shareholders and maintaining a strong financial position. Concerns about inventory buildup and supply chain disruption are valid based on recent trends. Inventory levels have been increasing, with a notable jump from $41,275,000 to $43,311,000 between June 30, 2025 and December 31, 2025. This growth in inventories may indicate potential issues with managing stock levels. Furthermore, supply chain disruptions pose significant risks. The availability of certain goods could be affected if foreign suppliers choose to limit their exposure to U.S. markets. Global supply chain disruptions or geopolitical instability can also impact transportation costs and international supply chain inflation, particularly ocean freight. Additionally, uncertainty surrounding future tariffs may cause disturbances in ocean shipping capacity and create inflationary effects on costs. These factors collectively contribute to concerns about the stability of supply chains. That concludes the financial summary for Napco Security Technologies, Inc. Feel free to comment below, and I will be happy to answer them when possible.